lesson. So we are given that the following relates to Try It Out Enterprise for the year ended 31st December 2005. So you see the trial balance given: opening stock, sales, cash, creditors, commission received, discount received, bank, carriage on purchases, which is the same as carriage in what? Capital, purchases, drawings, wages, machine, debtors, postage, sundry expense, rent, furniture. And here we are given the following additional information: closing stock, commission in arrears. Commission in arrears. We have rent prepaid, postage is still outstanding, sundry expense accrued. So before we begin, I think last time we were able to go through the adjustments, and I indicated to you that we are going to discuss a minimum of 10. So we went through the first 4, and for the purposes of revision, the first 4 we saw were: 1, the accrued expenses. Okay, and we said accrued means that owings is in arrears, you haven't paid, it's outstanding. Okay. Now we saw that to treat it, these are the following things you do. In the profit and loss account, you add, and then in the balance sheet, it is a current liability. I want to believe we all remember this. So that was accrued expenses. The second one was prepaid expenses. And for prepaid expense, we said that these are expenses that you have paid in advance, you have overpaid, right? So for example, your rent for this year is 1,000, and then you have paid 2,000. So you have prepaid the rent. For that, in the profit and loss account, we indicate that you less. Okay, you less from the expense, and in the balance sheet, it is a current asset. Then we saw the third and fourth, which were income accrued as well, or accrued income, and prepaid income. For the income, we saw that in the profit and loss account, since it is prepaid, we less. And then in the balance sheet, prepaid income is a current liability. I think I gave a lot of explanations on that. So, I have shared the video. So in case you have missed some point, please go back and review. Now for the income accrued or owings, we say in the profit and loss account, you add, and in the balance sheet, it is a current asset. So the summary you can draw from it is, for all the accruals, whether it is income or expense, in as much as it is accruals or owings or outstanding or due, you add. But then in the balance sheet, the accrued expenses are current liabilities and the accrued income are current assets. The opposite is for the prepaid. For the prepaid, we less in the profit and loss. So if you look at the additional information given in this question, apart from the closing stock, the second one, commission in arrears. So professors, which of these adjustment is given in this question as additional information too? Is it income prepaid or income in arrears, or expenses prepaid or expense Let me get your view on that. Whoever is ready can give me his or her opinion. Okay, let me call Prof. Sandra. Commission in arrears. So when you do the assessment, is that an income in arrears, or which of these four does it fit?
Yes, I don't really know.
I'll give it a try. There's no harm in trying, right? Prof. Alexia, you want to assess Sandra? Prof. Alexia, any idea?
So please, income accrued.
Income accrued. Income accrued. Let me get an opinion from Prof. Frank, and then I'll. So Prof. Frank, Prof. Alexia says income accrued. What do you say? Prof. Frank, we can't hear you. Can you adjust yourself?
I don't have an idea for this one.
Okay. So Prof. Alexia, thank you very much. That is awesome. So you see, it is not difficult. When you see commission in arrears, the question you ask yourself is, what is this commission? Now, commission can be an expense or income depending on whether it is paid or received, right? So in your trial balance, how do you know this commission is an income or expense? If it's an expense, it will be at the debit side because all expenses have debit balances. And if it's an income, it will be at the credit side. So you quickly have to run through your trial balance. And if you go to, you see this here, commission, right? Commission, they have attached received, and it is at the credit side telling you that this is an income. You received commission as an income. So if you are then given information that commission is in arrears, they are not referring to any other commission, but this commission, or that's the only commission in the tribal. And this commission happens to be an income. So they are telling you that some income is in arrears. And like we said, arrears simply means owing or outstanding or due or accrued. So this commission in arrears fits for the income accrued, which is the third point on my screen. An income is in arrears, or an income is owed to the business. Okay, so you should be able to determine that this is an income prepaid or income in arrears, etc. Otherwise, you may not be able to pass the appropriate adjustment. So the commission is an income. So an income in arrears, which is the same as income accrued, would have to add it in the profit and loss. And then in the balance sheet, we'll show it as a current asset. Let's go to the third one, which is rent prepaid. I'm sure this one is very familiar. Rent prepaid. So Prof. Sandra, I think now maybe the idea is in rent prepaid. Is it an expense accrued or prepaid, or income accrued or prepaid income?
Prepaid expense.
Thank you, prepaid expense, because the rent you see here in this question, rent, has a debit balance, and for that matter, is an expense. So an expense prepaid. Thank you very much. So I think now the understanding is gradually popping up. The fourth one is postage is still outstanding. And if you go through, the postage is an expense. So an expense is outstanding. And when we say an expense is outstanding, it's the same as accrued expense. Okay. Then we also have sundry expense accrued. This one is even spelled out. Sundry expense accrued, right? Okay. Welcome back, Prof. Alex. So when you are given the additional information, you should be able to identify these items, okay, so that you can be able to tell whether you add or less, and in the balance sheet, whether you show it as a current asset or a current liability. So let's begin the question after digesting the additional information. So the name of the business, Try It Out Enterprise. We have to prepare the trading and profit and loss account for the year ended 31st December 2005. Okay, so we put in our three columns. The currency is our rupees or rupees. Yes. Okay, so we all know that for the trading account, we begin with our sales figure, right? So what is our sales figure here? Given in the question 245. We need to always check whether we have return inwards in the question. And the answer is no, we don't have return inwards. So our sales figure will be 245,000. Okay. So if you don't have return inwards, you don't need to less it. Your straight will be equal to your net sales. After that, we go on to less cost of sales. And I want to believe my professors are very conversant with the format. So please, what do we start with the cost of sales? Prof. Frank. Prof. Frank, can you hear me?
So I think your line is breaking.
Okay, can you hear me now?
Yes.
Okay, so take us through the cost of sales. What and what do we put in to get our cost of sales?
So our opening stock.
Okay, so opening stock. That in the question.
Then
so you give me the figures as and when you mention them. So the opening stock is 20,000. Then what do we do next?
we input the purchases.
Okay, the purchases. Where should I put it exactly?
The first.
Okay,
the first column.
Okay, so the purchase figure is 190. Then what do I do next?
The carriage on purchases.
Okay,
We add it.
We add the carriage on purchases. Which is 1,500. So there is no return out to us, right? So we get our net purchases. Is 191,500. Okay, good. So thank you, Prof. Frank. Prof. Sandra, can you continue for us? We have our net purchases, we have our opening stock. What do we do next and what do we get next?
You add the opening stock and the net purchases to get the cost of goods available for sale.
Thank you. So we add these two to get the cost of goods available
for sale.
Okay, so after that, what do we do next?
Less closing stock.
Exactly, we less the closing stock, which is 8,000. Okay, and that'll give us our cost of goods sold.
So
So we have cost of goods sold of 303,500. What do we do next, my able Professor Alessia? Prof. Alessia, the ball is in your
So
court.
please, you add direct trading expenses
Okay,
in the personnel wages.
Okay, we add the trading expense, which we have wages here, and that is 55,000.
So sir,
And is there any other trading expense? Let's see.
hello sir.
Okay, so it's only the wages. So adding that on, we are going to get a cost of sale of 258,500. So we're going to get a gross loss, right? Because our sales is lesser than the cost of sales. So a gross loss of So 13,500 is the gross loss. So this is how you can write it. When you write gross loss, please don't negate the figure. And in accounting, we don't write negative. You put them in brackets. So it's either, let me show you here. It's either you write it the way I've written here, gross loss, and put the figure there. Or when you write gross, for those who want to use a profit. So gross profit. And then this is how you write the figure. You put it in a parenthesis, 13,500, like this. Okay. So you don't write negative 13,500. You put it in a parenthesis. But you should know that the English accompanying it should be gross profit. Right? If you write it this way, gross loss, and you put the figure in brackets, it doesn't sound very well. Okay. Good. So how many of us had this gross loss? How many of
I
us?
got the same thing.
So why didn't you submit? You people should build the confidence in yourselves and the trust. Okay. In accounting, we don't seek perfection, because at the end of the day, we are going to check every step you went through to get the final answer. And so you see, you got this and you were scared that maybe you'll get it wrong. Right? So please, next time, submit it as you have. Don't be scared about anything. Okay, so when we get the gross loss, that ends the trading account, but here we are to continue with the profit and loss account. So in our profit and loss, we add other income. So please, what other income do you have in this question? Other income. who is going to assist us get the other income? Oh, Alexia just went off. Prof. Frank and Prof. Sandra, what other income do you see in the question?
So the commission in arrears.
Commission received. Okay. So last time I gave you a hint that if you are looking for your other income, you look at the credit side of your tribal. As a matter of fact, we listed the other income to be discount received, commission received, rent received, interest on investment or income from investment, these 5, right? So this question right away, you would see here, this is your sale, this is creditors, commission received. That's the first one. Then you have discount received following. The other one is capital, right? So the other income we have is discount received and commission received. However, there is an information on the commission that there's some amount in arrears. So when you get to the profit and loss account, you have to be careful about these 4 adjustments we have seen for any income in arrears or prepaid or any expense in arrears or prepaid. So as you list it, so your other income is commission. So immediately you put in that commission, you have to tell us that the commission we received is 1,200. However, additional information is telling us that there are some arrears. And we all agree that for arrears or owings, we add. So you add it to it to give you a total of 1,300. Did you get this? I want to believe so. Then the discount received. As for the discount received, there is no adjustment or any information on it, right? So we put the exact figure 800 there. These are the only 2 income you have. You add, and I think your figure will still be negative, right? So here, when you are punching your calculator, you have to be careful to realize that this 13,500 is negative 13,500. And you are adding, so plus 1,300 plus 800. You get up 11,400. And this will represent total loss, okay? Total loss. Loss because it's a negative figure. If it were to be positive, then you call it total income. However, I want you to pay attention to how we dealt with the commission and the additional information arrears. So always remember arrears, accrued, owings, outstanding, due. We add. And then it is the prepayment or prepaid or paid in advance. Sometimes instead of prepaid, you see advance. Those are the ones that we list. Okay. So we now have our total loss. We go on to less operating expenses. Please, if you have a question, ask me. Are we okay with the commission and how we adjusted it in the profit and loss account? Just going back, we just agreed that for income accrued or arrears or owns, you add. So the question told us that there was a commission in arrears of 100. So that 100 will add it to the one we already have in the tribal. Hence, the meaning for this add in the profit and loss account. Okay, now let's go to the expenses. So like I tell you, your expenses are on the debit side. So come to the debit side, pick it, but make sure you deal with any information.
Sir,
Yes, please.
sir, please, I'm confused how you got the total loss.
Okay, so maybe I should make it this way. This figure is negative, right? Let me change.
Yes, please.
So profit, and let me put it in a bracket. So since it's negative in accounting, you use the parenthesis, right?
Sir, I understand.
You now understand it. Are you sure?
Yes, please.
Mr. Moore,
Yes.
could you please still explain it for me?
Explain the.
It's what you were about to do.
Okay. So I'm saying that when you get a negative figure, it is a gross loss, right? So if you indicate that this is a gross loss, if you indicate that this is a gross loss, then when you are writing the figure, just write it without any negatives. As a matter of fact, we don't write figures in accounting like this negative. If it's negative, we put it in a parenthesis. And I think I showed that here. Okay. So you put it in a parenthesis like this, as I've done here. But if you put it in parenthesis like that, you don't have to call it a loss again. Okay, you call it gross profit. But the parenthesis tells you that that profit is negative. So that's one way of presenting it. The other way is that you go this way. Instead of using gross profit, you tell us that this is a gross loss. Okay, and for that one, you don't put the figure in any parenthesis. You just leave it like that. Okay. Okay, so I went for the second option where I call this gross loss and put the figure there. But when you are calculating, make sure you always remember a loss is a negative number. So here we are adding on other income. When you get your gross profit or loss, you add other income. Okay, so the other income, last time we saw commission received, rent received, discount received, interest on investment or income from investment. So when we search through this question, and all this income has credit balance, when we went through the question, we saw only discount received and commission received. Here they are. Okay. These are the two income that we saw given in the question. However, the commission were given additional information that there was some arrears of 100. And we have all agreed that when you have additional information telling you about income in arrears or accrued, you add it. So we are adding that 100. So you see, the 100 that we are being told that is in arrears, we are adding it to the 1,200 already in the trial balance to give us 1,300. Okay. Then for the discount received, we wrote the 800 because there was no information on it as to whether there was prepayment or, and most of the times for discount received, they don't give any adjustment on that. So we have presented our other income. Now we have to add this other income, but unfortunately this figure is negative. So when you are punching your calculator, you punch minus 13,500 plus 1,300 plus 800, and you still get negative. Okay, a negative figure, and that negative figure is a loss. That's why I've written here total loss. If it was positive, then we would have written total income. Okay, because when you check the format, when you add the other income to the gross profit or loss, you get total income. If it is positive, if it's negative, you get total loss. Please, I hope it's okay now.
Yes, please.
So we are now left with lessen the expenses, but the time is up. So let's rejoin the second session and complete the profit and loss account. Thank you.